Welcome to Market Day Report. I'm Tony St. James. Well, here we are on a Friday. Are you ready for the weekend, or are you ready for a WASDE report coming out on Monday? We'll talk more about that in just a moment. First, let's look at overnight trade for corn. And we're up September 380.5, trading a penny and a quarter higher, with the new crop December. It's been as high as $3.99, but $3.98.5, penny and a half higher after falling below that $4 mark yesterday. Speaking of falling, we saw the September contract yesterday for soybeans drop below that psychological level of $10, and it's still there, $9.99, though it's up 5.5. It's been as low as $9.93 in overnight trade. New crop still in the tens at $10.13 2 pennies off the day's high, and a nickel higher in the overnight session. Over in wheat, we'll start Chicago. We kept seeing rallies at least trying to begin yesterday in Chicago, but couldn't sustain them. Yeah, overnight, 12.25 higher on September, 549.75. December, 11.5 higher, 573. Some concerns about wheat production around the world leading to those gains. 13.5 higher for hard red. That's at 565, and D's 581, penny off the overnight high at up 12.25. And Minneapolis spring wheat is rallying as well, up 11.25 front 3 months, and the December at 616.5. Cotton in New York, overnight session, December 68.47. That's up 123. Well, let's stop and try to make sense of some of this and get ready for Monday's report. Brian Hoops is with Midwest Market Solutions. Brian, welcome back.
Good morning, Tony. Good to talk with you once again. Well, we have a little bit higher prices overnight, led by the wheat, as you mentioned. There was some private export sale announcements as well this morning. All week we've been hearing that China's going to step in and buy U.S. soybeans, and when the price got low enough, they apparently did. So they bought a couple cargoes, 132,000 metric tons of beans. There was also a sale of 100,000 metric tons of soybean meal, and then 212,000 soybeans that were received and then resold to an unknown destination. So that's always a little bit confusing what the USDA means. I believe that it was beans that were brought into the country and then resold back out, and so it's not necessarily new sales, but it's, it lessens our imports a little bit on the balance sheets. Nothing really is going to change those balance sheet perceptions. Monday's supply and demand report will give us a little bit of volatility. The USDA is expected to increase corn soybean yields a little bit, but they're also expected to adjust the harvested acres based off of FSA data, and that's going to increase the volatility. There's some talks that it could be 75,000 acres of corn. Some talk up to 1 million acres of corn could be adjusted. So that's where the volatility is going to lie in this report, I think, on Monday morning. And so we may have a propensity to see a little short covering, just kind of take some positions off the table, lessen the risk, especially if this wheat market can sustain these gains that we saw in the overnight trade.
Yeah, we're just trying to find something to rally on, and we've been talking about it all week. Outside of the debacle of what happened on Monday in the equities. But really, the only thing we have to play at this point is export sales, problems around the world, or a WASDE report, right?
Those are your things that a lot of people will look at, maybe trying to indicate that we've found a bottom. The bigger picture is going to be weather here the last half of August and into early September as we finish out the growing season for the majority of the Corn Belt for corn and soybeans. If we have a forecast that has above normal temps, but also has above normal precipitation, that's going to be nearly ideal to fill out the soybean pods, and we'll have probably a real monstrous type crop. So, the next 3 weeks, 45 days or so is going to be very important for this crop as far as, are we going to have record type yields? How much are we going to push this yield potential? There's rain that's been falling in the southern plains this week. There's more for the weekend and into next week. That would be ideal for the double crop soybeans because they were off to a good start. Then it got real dry. Now we could finish that crop off with some rain would really help yield potential.
Okay, Brian Hoops is with Midwest Market Solutions. He's in Missouri. We're in Nashville, but we're coming back in just a moment to dig into livestock futures. Hang around. Market Day Report continues after this. It's Market Day Report. We're getting the day started, but looking back at how markets ended the day yesterday. Livestock futures don't trade overnight, so how did we finish the session? Lower. August off 22, October down $1.25 at 178.02. It was 52 cents off of the day's low. And for feeders, we on Thursday ended the session with September at 237.42, $1.47 lower, and the hogs on Thursday, same thing, 95 lower on the October, 73.62. The August holding on to 90 at 90.02. That front month was 57 lower. As we try to figure out where we'll go the rest of the day, since we're at the end of the week, we bring Brian Hoops back in. And Brian, cash trade now for cattle, is that what's going to drive the market?
Yeah, unfortunately, the cash has kind of followed what the futures have done. The cash trade this week, in fact, all the news this week has been negative. Packer margins are deeply in the red at $78 a head negative. We've had a slaughter pace that has not been very aggressive because the Packers losing so much money on each animal that they kill. They're trying to slow those kill speeds down in an effort to prop up the box beef, and that's not responding. We had one day, I think, this week where boxes were higher. They're trading lower once again. So the cash trade has been falling along with the futures market. We were down about $5 on a dress basis, $1 to $2 weaker in the Southern Plains on the cash trade. So we're trading 186 to 187. And you just don't have any real news here to try and spark this cattle market. The steer weights that came out yesterday, they jumped 6 pounds from the prior weeks. We're 26 pounds heavier than a year ago. So you have more tonnage coming at this market. Really, the only thing as a bullish trader you can hang your hat on is the fact that we have tight supplies. And that's, how long can you stay at these high price levels when you're not selling the box beef, when you're not exporting product, as we saw in our export sales yesterday? That's been the struggle. The market has corrected about $12 off of its most recent highs. Last year we corrected close to 30, so maybe we're not quite done going down yet. I know everyone wants to anticipate that we found a bottom. I don't know that the futures have told us yet that there is a bottom in place. So we're probably not going to get a lot of help out of the stock market with that opening lower here this morning. So it's it's really important for the bulls here to step in, defend their positions, and not let this thing take another leg down.
Well, another story will follow down the road. We still have 40 days before the Fed makes their decision public. That decision's probably already been made, but they'll make it public on interest rates. So that gives us something to talk about next week. Come back and see us, okay?
All right, sounds good. Have a good weekend.
Yeah, Brian Hoops is with Midwest Market Solutions, and we'll open up the livestock markets here pretty soon.